Hello, everyone. This is Marshall Gittler speaking. I'm going to discuss the main issues facing the FX market in the coming week, beginning the 8th of January. Well, the dollar started off the year on a downturn. The non-farm payrolls coming out later today will probably determine the course of the dollar early next week, although, as we've seen in the past, the non-farm payroll figures don't tend to change the course of the dollar for long. The graphs show the dollar tends to weaken after the non-farm payroll figures, almost regardless of whether they're better or worse than expectations. It appears that the dollar is being sold on a risk-on environment. Global stocks are hitting record highs, with most major stock markets at least back to levels hit before the global financial crisis of 2009. Commodities have risen for 14 days in a row, a record winning streak. Yet at the same time, gold futures have rallied for 10 consecutive days, equaling the previous record-winning streaks. It seems that fear is down and everything else is up, except for the dollar. With everything rising steadily, volatility has collapsed across asset classes. The VIX index, the so-called fear gauge of Wall Street, is trading with an unprecedented 8 handle. What might change the direction? My old favorite, U.S. politics, seems to be immaterial nowadays. The revelations about the chaos in the White House just keep coming, and yet, so long as Congress keeps up a pro-business stance, it doesn't seem to matter. Even North and South Korea seem to be working around the president nowadays. The focus this week will be on inflation. We get the U.S. Producer Price Index on Thursday and the U.S. CPI on Friday. The minutes of the recent FOMC meeting noted that, quote, recent readings on monthly inflation had edged up, unquote, with many participants expecting it to move towards the 2% target. Moreover, the committee discussed several risks that could result in a faster than expected increase in inflation, such as higher output, fiscal stimulus, or accommodative financial conditions. Against this background, the slight decline in the headline inflation figure that's expected to 2.1% year-on-year growth from 2.2% could knock the dollar further, although with core inflation expected to remain at 1.7% year-on-year, almost at the Fed's 2% target, I wouldn't expect that much of a hit. China will also release its inflation data on Wednesday. The pace of increase in producer prices is expected to slow dramatically to 4.8% year-on-year from 5.8%. That could hit the pound and the euro by making it less likely that those countries will have to increase interest rates anytime soon. For the EU, the main indicators will be German factory orders on Monday and industrial production on Tuesday. There are no forecasts available for these at the time of recording. The ECB will also release the minutes of its December meeting. That may provide some more insight into the disagreements among board members about how quickly they should end their quantitative easing program. It could prove negative for the euro, in my humble opinion, if it shows the dove's strength, as I expect it will. The focus for the UK, aside from the usual Brexit events, will be the release of the industrial and manufacturing production, plus trade data on Wednesday. Growth in both manufacturing and overall industrial production are expected to slow notably, while the trade deficit is expected to widen slightly, although remaining narrower than the recent trend. These data could be negative for the pound. Meanwhile, there's been talk of a cabinet reshuffle in the new year that could see Brexit negotiator David Davis losing his post and the adamant anti-EU Foreign Secretary Boris Johnson taking his place. That could mean a tougher negotiating stance for the UK and therefore a higher probability of crashing out of the EU without an agreement, the so-called hard Brexit option. I think that would also be negative for the pound. As for Japan, the general risk-on environment tends to be negative for the yen. Particularly, the opening of talks between the two Koreas is a significant reduction of tensions in the region, which is also likely to be negative for the safe haven yen. So overall, it seems that there are reasons for all the major currencies to decline this during the week. Against that background, I expect the euro to outperform, while the dollar may be weak and the pound and yen fall most. This is Marshall Gittler bringing you the outlook for the week beginning 8th of January. Thank you for listening and good luck in your trading.